heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, U.S. inflation, it tops forecasts in a blow to rate cut hopes. We'll discuss the implication of higher for longer rates on the tech sector.
Plus, we'll dive into the names reporting tonight after the bell and get a read on the health of the gig economy.
And we'll get an outlook for crypto. That's as Bitcoin drops, having hit $50,000 for the first time in 2 years. All that and so much more coming up. First, we check on the macro picture. Today is dictated by that hotter than anticipated CPI print, which means, well, the market now anticipates rate cuts not happening until at least July, let alone March that we'd previously been anticipating. Look, it is a knock there to those rate cut views, and the S&P 500 falls off that all-important 5,000 level that we'd only just hit on Friday. The Nasdaq under pressure, the Nasdaq 100 in particular, one of the worst performing, off by 1.2%. So big tech really being squeezed at the moment, and you see those borrowing costs absolutely leaping to the higher side. The two-year yield eclipsing the highest since we've seen back in December when the Fed did pivot and really make the market think we were going to see some rate cuts coming in 2024. We're currently up by some 13 basis points. And Ed, before we get into the micro, we want to go broader with ClearBridge Investment Senior Research Analyst Hilary Frisch, who can really give us a perspective of what's been happening on a risk asset basis. And ultimately, we are seeing, Hilary, a perspective that, well, maybe rate cuts aren't happening, and what that means in terms of all the bets and the valuations ultimately that we've seen in big tech names. Do you think it's the right time to be selling?
Such a good question, Caroline. Thank you. It's terrific being here. We've had such a great run in technology in a relatively short period of time. And going into today's print, I was thinking that we're already entering a seasonally weaker part of the year. Now the 10 years up, CPI is looking hotter, and also the U.S. dollar is up. So we can and absolutely likely will have some sell-off at some period of time. I think at a minimum we should have some consolidation, some digestion. That said, I'm about as bullish as I can be on the intermediate to long term. I'm not sure who was expecting rate cuts to really take place in March at this point, given the Fed speak. And then finally, the pain trade has really felt up, not down. Today could change that. I think if we get to a 4.5% level on the 10-year, that's an important point of demarcation psychologically and also for valuations.
What was interesting is basically how all-in investors seem to have been going in tech stocks, particularly at the end of last week. Bank of America, as they always do, really dictating the flows that they've been seeing, and the fact that basically everyone had gone long this particular sector. Are we just seeing too much of a crowded trade at the moment?
We're seeing some crowding, we're seeing some signs of exuberance, but I think what we also saw was the fact that investors were really offsides for this move heading into it. There wasn't enough participation. We were seeing some chasing, absolutely. I wouldn't call it abject crowding, but I would say that last year was a year of reset and also profitability improvements. We saw 600 basis points of profitability improvement across software in particular, 500 to 600. That was pretty impressive in a deceleration year. And this year should actually be a year of revenue reacceleration, all else equal, if the economy doesn't absolutely fall apart, which doesn't look like it. So I think investors are willing to anticipate some of that. We're seeing some signs. They're willing to look out a little bit. We'll see how they feel in the spring.
Hilary, the root of that BOA survey that Caro was talking about is just optimism about global growth, right? Earnings in the context of a strong global economy. Listen to what Erin Brown of PIMCO told the show earlier today. Listen to this.
You're still seeing this market where you have one sector like the tech sector, which is up 40%, and you have another sector like healthcare, which delivered earnings down 20%. It's a huge bifurcation in the market right now, and I think that really presents a lot of opportunity for equity investors.
A huge bifurcation. Who even cares about inflation? Just go with the tech sector. Is that your attitude?
Oh, I think you have to care about inflation to a degree. And again, above 4.5%, you start to see some incremental concern over technology. For sure, it's a terrific point by Aaron. I think if we see a real broadening out of the economy, and yes, we've seen some sectors absolutely annihilated, those represent terrific opportunities. We think that as a firm at ClearBridge. I personally also tend to believe that as we move further through time toward the second half of this year, where I think we will see a point of inflection in technology, in part driven by AI, in part driven by initiatives around AI. You will also see tech do well ultimately. But tech will have to tread water for a period of time to the extent that either the 10-year continues to rise or the market broadens out to other sectors. So I think I don't know that we have to ultimately have an either or, although we might have one on an interim basis.
You go back to Economics 101. The idea simply is that the Fed uses rates and higher rates to dampen demand, right? Impact consumption. In a minute, Kara and I are going to go deep on some of the gig economy companies. If you look at Uber last week, there is no evidence that consumer demand really, or corporate demand, is slowing down. So it puts into question, well, what was the point of having higher rates, right, if that is the only mechanism available to them? What do you make of that thesis?
Well, it's not the only mechanism available to them, and we're going to see liquidity coming out of the market over time. It could be a lag. It certainly was a hotter print. We're not at 5%. 5% would be another story. But we'll see how things trend in the coming months.
What I'm interested in is some of your individual companies that you call out where you see the opportunities perhaps in this pullback to be putting more into. You like Microsoft, you like Salesforce, Oracle. Is this a moment to think about corporate spending rather than perhaps consumer spending, which we are worried about, particularly if we start to see more job losses in the back of AI?
Absolutely. Well, what I do like about technology in general is that I think we went through a mini recession last year. Last year, companies were concerned about recession. They were laying off people. They were optimizing costs. They went on a buyer's strike. This year, there's an imperative to spend. Even if you're not spending directly in AI, you need to lay the foundation to be able to leverage AI. So that's a lot of data related investments, harmonization, getting data in order. It's a lot of infrastructure investment. It's migration to the cloud. You're starting to see the signs of that. Interestingly, Datadog, a consumption name, and consumption names tend to lead, reported this morning. They reported a much better number. They reported slight acceleration. They guided extraordinarily conservatively, in my view, and rightly so. But nonetheless, the stock is actually down less than the NASDAQ, I think less than the S&P, and I think it's because investors can see the signs of this improvement, the signs of this need to spend. So if the economy, again, if we see outsized layoffs, that will be more of an issue. So far, we're seeing the opposite.
Look at Datadog now, Ed, down by 1.2%. It was off more than 6% at one point, but that knee-jerk reaction just pushing it back after the open trade, Ed.
Yeah, I think one final question I got for Hillary is, okay, we know the AI story, we know about inflation, we know about the Fed. How much of a wild card is the election this year for the technology sector?
Well, I have to imagine it's a bit of a wild card. It was last time Trump was on the ballot, but it frankly will get closer, but it feels like an eternity from now when I think about how these tech stocks move day to day. So I'll look forward to coming on and discussing that with you then, Ed.
All right, we'll take you up on that. Hillary Frisch of ClearBridge Investments, great analysis of the macro picture. Thank you. Let's go from what is the macro to the micro. There's a lot of stories that are happening in the earnings context. One of the things I wrote about at the beginning of the week in the Tech Daily newsletter was the gig economy. Uber had a blowout quarter. Now its competitors are up next. Lyft down 3%, earnings today after the bell, Airbnb as well, later in the week, DoorDash. What do we actually know about the demand side for the gig economy, but also the supply side? Let's go to Bloomberg's Natalie Lung, who covers this beat for Bloomberg Technology. Uber really set the bar high, right? Because Lyft lives in their shadow. So let's start there. What are you expecting this week from Lyft?
For Lyft, yes, as you mentioned, they're kind of in a tough spot in comparison to Uber, who has the scale of international markets and as well as scale in other verticals like delivery and advertising. So for Lyft, their performance, based on analyst estimates, pretty conservative. They some analysts say they could deliver a beat, but then the concern is also like how much can they balance in terms of offering incentives to get more drivers over from Uber, and how much like subsidies in that sense. And especially because they announced like a 70% pay guarantee last week to sort of attract more drivers onto the platform, and other features like better response on deactivation, account deactivations. And so the conversation would be around how much can you do that and not like eat into the margins.
Let's talk about margins when it comes to food delivery. Instacart, we're anticipating, this is one of the most shorted stocks out there at the moment. I think 40% of the free float is currently being bet against. What are the worries here?
Right, it's definitely, again, around the competition. So Uber, DoorDash, they have not only just grocery delivery, the majority of the business is restaurant meals takeout. And so they do have that scale there, which Instacart may be more limited right now. And also international. Uber is in a lot of international markets, DoorDash is in some parts of Europe, and Instacart is mostly in the US, Canada. So the growth rate there in terms of orders or gross transaction value will be of interest. Whether that can re-accelerate will be definitely a focus.
It's Gig Economy Week. Lyft kicking us off after the bell this afternoon. Bloomberg's Natalie Lung, thank you so much.
Firefly is Adobe's new flagship AI product that has been seen as perhaps a bit of a latecomer to the likes of Midjourney and DALL-E, but now the company is banking on one aspect that its competitors lack: a commercially safe data set, which provides IP guards, including legal support if anyone tries to sue them. Let's bring in Bloomberg's Brodie Ford for more on this. And look, it's not exactly a sexy growth story to a certain extent. It's more about, look, we've got you. If you're a big client and you want legal protection, you got it with us.
Yeah. Everyone knows the story of you're a big tech incumbent, and then this cool startup comes and smokes you, right? And everyone thought that's what would happen with OpenAI and Midjourney with the image creations. But Adobe has been coming out saying, you're going to get sued, right? Unless you use us, you use the other guys. What's going to happen is they sucked in images from across the internet with no copyright. It's a legal hazard. That's the argument they've made. And so they've trained their system on their own Adobe stock, meaning that they have their own rights to use it. Obviously, some of the creators might not love that. There's probably still some legal dispute. But so far, this pitch appears to be working with many big corporations.
You give the example in the Business Week piece of them commissioning photographers for like $80 to go out and photograph animals, and the animals specifically are not allowed to wear clothes, which is, what fun is that? The thing that always surprises me about Adobe, right, Brodie, is that it is in the top 40 biggest publicly traded companies in the world. And what it has in common with Microsoft is it's got a very good track record of selling subscriptions on software where you can get a similar tool for free pretty much anywhere, but people still pay for it. So let's go back to the intro. We said they want to be profitable. How do they plan to make Firefly profitable?
As you said, Adobe's Creative Cloud is very profitable. I mean, I've had people say to me, it's one of the most profitable things ever. Not even just software, just products. It is a complete cash cow. And it is not because it's the easiest to use or the cheapest, but because it works well together, right? If you have a creative agency, you have a marketing agency, they need photo, video, audio. It needs to work well together. And now they need AI. And so Adobe's bet is that when they put AI into each one of these products, into the content supply chain, as they call it, it'll work well together and people will be willing to pay extra for it. And more importantly, that they won't go to OpenAI or Midjourney and then cancel their Photoshop subscription. I mean, right now, they're barely even charging for this. It's more of a play to stay in the ecosystem.
And within Adobe, inside Adobe, though, there are employees and staff that are worried about that ecosystem and the creatives that operate within it.
There's a funny story we hear. We have it in the story about, there's a presentation in 2019. Someone is saying, listen, you guys, you are going to get disrupted if you don't take this stuff seriously. And the executives in the room being like, we're good. We got Photoshop. They're not going to leave us, So yeah, I mean, it's a classic story. A big company doesn't invest enough in an emerging technology and gets disrupted. And 1 year ago, everyone expected this to be the case for Adobe. Today, the picture's a little blurrier. I mean, their argument has been landing, and I talked to a lot of Wall Street types who say that the two companies who are going to see a material uplift this year from AI, Microsoft first, and then Adobe.
And you see that coming from our own Bloomberg Intelligence team members. I'm thinking Anurag Rana putting out a note this morning saying Adobe could see a $1 billion midterm generative AI lift at the moment in terms of Creative Cloud. Is there still any ramifications from the big M&A deal that fell apart, the Figma, the anticipation that they've been distracted by having to go through such legal wranglings rather than focusing in on what is, for many, the new electricity when it comes to data vis-a-vis the new way in which we're thinking about technology?
The way most folks understand it is that Figma was supposed to transform Adobe, and then AI was supposed to transform Adobe. So the fact that Figma fell apart, that means AI really has to work out. I mean, a lot of their eggs are in this basket. And we haven't even touched on the idea that this technology might kind of disrupt their own user base, right? I mean, millions of people pay for these tools. Are they going to be out of work? Are they just going to want to generate images and not need to pay Adobe? I mean, even those who are bullish on Adobe's AI efforts see that there is some potential for this to knock out a bit of their user base. So, I mean, yeah, now that Figma's gone, this needs to work, and it appears to be at this moment, but there is uncertainty remaining.
Bloomberg's Brody Ford with the Adobe AI Deep Dive. Thanks for coming on the show, mate. Now, coming up here on Bloomberg Technology, Elon Musk's X looks to compete with the likes of YouTube by adding new advertisers targeting features to the platform. We'll bring you all those details next, as the company also looking to lure in creators. Kara, what are you looking at?
Another story that we're watching, and this is a European company, of course, ASML, the most valuable tech stock in Europe. A little bit of pressure today. At one point, some significant pressure. A so-called fat finger, basically an erroneous trade, whether that's by a human or an algorithm, is what many are blaming for a 7% plunge that we saw in the stock at the open. Now, the Euronext, the overall index that it's on, said, look, that wasn't to blame, had no alerts that were triggered. But now people are basically rather questioning the valuations that we've seen, the run-up that you've seen on ASML and in SAP, for example. We're up by 2.8% over the last couple of trading days. This is Bloomberg Technology. Time now for Talking Tech. First up, OpenAI CEO Sam Altman, he said that the UAE could serve as the world's regulatory sandbox to test AI technologies and then later spearhead global rules limiting their use. The comments come, of course, as Altman is courting investors in the Middle East for a semiconductor initiative to advance AI. Meanwhile, X has won a dismissal of claims that it conspired to supply the Saudi government with confidential user information to identify a Saudi man who was arrested, tortured and sentenced to 20 years in prison. That's for posting remarks critical of the government. Now, the person in question had alleged that the social media company conspired with the Kingdom of Saudi Arabia to violate the Racketeer Influenced and Corrupt Organizations Act and the Alien Tort Statute. Then, in a forum on X Spaces, of course, Elon Musk told US Republican senators that there is no way in hell that Russian President Vladimir Putin could lose the war on Ukraine. It was also, in that Spaces, opponents of a Senate bill that would provide further assistance for Ukraine to continue battling the full-scale Russian invasion that, of course, began 2 years ago, Ed.
Let's stick with X. Elon Musk's platform is adding new advertiser targeting features to better entice video creators and compete against YouTube. Joining us with the details, Bloomberg's Aisha Counts. And Aisha, we reported this idea back in October, right? So Musk and Linda Yaccarino did their first ever joint all hands with the company, and they said, our competitor in the future is going to be YouTube. And what's happened since October is all of these video-focused developments, and that's what you've been writing about today.
Yep, exactly. X has been pushing into video hard. As you mentioned, Musk has been talking about this forever. And now we're starting to see some realization of it. So just in the past number of weeks, they've signed content partnerships with people like Don Lemon, former CNN anchor, and Tulsi Gabbard, who is the U.S. representative and a presidential candidate. They've signed content deals with them to produce shows and put them exclusively on X first. They did the same thing with the World Wrestling Entertainment, so WWE. And they're continuing to push to go after creators. And now what we see differently is now they're giving advertisers more control to actually put their ads on the profile of a creator that they like in order to generate more revenue from them and just allow those advertisers to take advantage of the profile and the followers that these creators are going to bring to the platform.
And also, I suppose, to a certain extent, would it provide some certainty to an advertiser that I'm just putting my brand, my name, my message via one particular content creator rather than who knows where it ends up being next to?
Absolutely. I mean, that's been a huge topic of conversation with X in particular, as you both know. Over the past year or so, they've dealt with a lot of content safety issues. So we saw a bunch of advertisers leave when they found out that their ad was next to anti-Semitic content, for example, not too long ago. And so absolutely, this is another control to say, hey, I want my advertisement to only be on a video by Mr. Beast, for example. So you know you're reaching those followers. You know that your content is going to be right in front of their videos. So it lessens the chance that it's going to be next to some harmful content. So it is a little bit of an assurance for an advertiser. So you can imagine that might be something that's attractive to them.
Aisha Counts, all over the developments at X. We thank you so much.
I'm also taking a look at Bitcoin, and I'm sorry to say that we have also changed direction on Bitcoin. We're lower for the first time in around 8 sessions, but over those 8 sessions, we've posted a significant gain of 15%. We're below 50,000 US dollars per token as it stands, but when we did hit that milestone, I know that all of us were very excited because it's kind of psychological, that level of 50,000 US dollars per token.
It is a focus. The vying of the market capitalizations is one we focus on, and then we think about the vying when it comes to which crypto ecosystem is really on the win. Let's talk about all of this as to what's bringing us up to that $50,000 level and then dragging us back down. August co-founder and co-CEO Aya Kantorovich is joining us for more. And yes, perhaps the CPI print takes the wind out of its sails a little bit, like every risk asset on the day. But what has been blowing us higher when it comes to Bitcoin? Is it ETF flows, or is it something else more fundamental that's happening?
Sure. I'm sure that folks would like to say that a part of it has to do with Jack Dorsey wearing the Satoshi shirt during the Super Bowl. But it really is, to your point, U.S. inflows coming in around the ETF. We saw April and June BTC call buyers with strikes at around 70K to 75K, which are all-time high prices. We're also seeing a lot of that narrative around the April 19th halving coming up, and overall spot and option positions that are really gearing up for pricing to break all-time highs in Q2. You saw BTC perp futures open interest also cross 11 billion, which is the highest ever since December 2021. So a lot of U.S. inflow momentum going on right now.
And I hate to always just talk about and focus obsessively about price, but ultimately the market being dictated that we're going to eclipse this 50,000. Does it think we're going to eclipse the 69,000 that we've seen previously?
Absolutely. It looks like, again, from anywhere between 70K to 75K, that is very, very bullish. And we really haven't seen those prices historically. So yes, it does look like we're going to eclipse those. And it really does look like that's coming from the US side. You're seeing that reflected in Coinbase BTC pricing, which was trading at a premium to Binance BTC pricing, which again reflects the fact that you're seeing a lot of US inflow coming in that's pushing that price higher at a premium. And as well reflected by the ETF inflows, which continues to make that narrative strong, U.S. specifically focused.
We were reflecting on the show yesterday that if you think about it in really simple terms, from kind of end of 22 to present day, there's this kind of minimal jump on Bitcoin from $44,000 to $48,000 per token. And in between, all kinds of chaos and volatility, lows of 15,500, a brief peak. But what also happened in that time is that thousands of altcoins and other digital tokens just cease to exist, right? They become illiquid. How much of this story is about Bitcoin kind of being the only stable option if you want some exposure to a cryptocurrency?
I think it's pretty crazy that we're talking about Bitcoin now as being the stable currency, but you're even seeing that reflected in some of the language that Fidelity has pushed out. I would say that's very much true. However, Ethereum is still playing into that narrative. A lot of what's going on right now is with regards to the restaking narrative in Ethereum driven by Eigenlayer. And so you're seeing a lot of narratives around both that and an ETH ETF. Yesterday, you saw that Franklin Templeton also submitted an application for ETH. ETF, which caused a small bounce in the ETH price. And so we're likely going to see that happening with ETH as well. And you are seeing other applicants for an ETF, whether it's Solana or other altcoins, where that may also lead to, some of that lower volatility around those tokens as well.
You've been building for a long time, whether it's at August, whether previously you were helping being on the founding team of Falcon X, but also you're in the investing space and understanding what was going on over Pantera Capital. What is the building like right now when we think about sort of the oxygen being sucked out of the room by the OGs of Bitcoin and ETH, but still Solana getting a look in, some of the altcoins? What's being built from an infrastructure layer, from a DApp level, from an actual go out there and use this in some way, shape or form?
It has never been a hotter time to build in this space than now. You are seeing folks doubling down, people who have been in the space for years, who have really clarified what are to your point, the problems on the infrastructure layer that need to be solved for people to actually be able to use this at scale. And so the biggest thing right now is account abstraction, being able for these applications to be used on a front end without having to deal with all of the interactions with the blockchain on the back end. We've been talking about that narrative for years. How do you get to a point where you can just send a transaction using a front-end UI? And we are getting closer to that point. Again, this infrastructure takes time to build, and every single day we're getting closer to that. Like I said, it really just hasn't been a hotter time to be a builder in crypto than today. So it's very exciting.
Real quick, halving due in April. Do you care?
Absolutely. I would say there's always a narrative around it. It's whether it's going to be buy the rumor, sell the news. That's typically what we've seen to date. But again, it does take a while for the flows to come into the ETFs, especially on the RIA space. So it'll be interesting to see what happens on the retail side, what happens on the RIA side, and if that narrative is going to be reflected with users there. And of course, Asia. We haven't seen as much Asia inflow with all of this being historically led right now with the US side. So
right.
Very, very interesting. And then the ETH-BTC ratio.
August co-founder and co-CEO, Aya Kantarovich. Great to catch up here on the program. Now, Caro, you went out the building in the snow this morning for a pretty important conversation.
I fought the elements, Ed, for a breakfast meeting, because I was lucky enough to be sitting down with the Sinovation Ventures chairman and the CEO, that's Kai-Fu Lee. It was over at the Economic Club in New York, and on 54th Street, we were chatting about what else? Artificial intelligence. Of course, he's written many a book, forward thought on many an impact. And we started the conversation by asking, look, if big tech companies, the ones that are still here, can actually truly pivot to be AI first. Take a listen.
Theoretically, they're the best equipped to be AI first because they have the most AI experts in those two companies, if you count OpenAI in Microsoft's camp. But what they face is a fundamental business issue of cannibalizing your own business. So for a large company, imagine, if you will, you're Microsoft or Google, the first thing you're going to think to want to do once you invent this technology is how do you make money? And of course, Google will make the most money from putting it in search. Microsoft will make the most money by putting it in Office. So that will be the low-hanging fruit. But will Microsoft become a disruptor that says, I'm going to build a new engine that's AI first, that causes people to no longer need or want to use Office or pay for it? Few companies, if any, has ever done that, right? When Kodak invented the digital camera, they shelved it because they think it would kill their film business. It did, but it wasn't because of them, but other companies, right? So the same thing happens with Intel not embracing mobile, Qualcomm not embracing AI, and the list goes on. So it's fundamentally really hard for a large company not to take this technology and put it in their most best-selling product to make that easy, low-hanging fruit. And it's incredibly hard for them to build a disruptive product that will challenge, cannibalize, and potentially kill the revenue that is currently a cash cow for them.
Now, of course, Kai-Fu Lee worked for both Microsoft and for Google over there in China. He's been, of course, an investor. He's an author. But he's actually getting back into the world of building businesses. And he's got his own,01.ai. And this is all about sort of the Chinese models that he can build.
Right.
In focus is open source. And he actually said one of his great lines when we were sitting down was he thinks OpenAI should rebrand. We've heard that one before. But he thinks it's one of the most closed shops there is.
closed AI. I mean, he's seen as a bridge, right? Understanding what's happening in China's domestic efforts on AI. He knows what the Western world is doing. But as you said, he's going back to being a startup founder while being plugged into the mega caps that have basically competing business models, is what I heard he's trying to outline here. Their AI work and then their core legacy business.
And he thinks they will be disrupted and eventually the winners will be AI first. I have to say, I haven't seen him quite as well worried in a long time. He's usually an optimist, but he is concerned about the scale, the pace at which we're innovating. But he did talk about China, and look, he still thinks that China can get to never beat US in innovation, but certainly on implementation, he thinks it can get there.
Well, coming up here on the program, we will continue to talk about AI and opportunities in the investment space, innovation more broadly. That conversation with Alec Ross, board member at Amplo. Cara.
I just want to focus a little bit on what's happening with IBM today, because New York parents, amid this snow, Ed, have had real tech issues basically getting their kids to do remote schooling. And there are statements coming from the New York City Department of Education on X saying we're currently experiencing issues with services that require IBM authentication login. We're actively working with the IBM to resolve it, and we'll provide an update. And in fact, they did roll out some added capacity and improvements to the system, but like every stock today, it's down by 1.1%. Sorry to all those parents out there. This is Bloomberg Technology.
Okay, time for the VC roundup. First up, VC firm Founderful, previously called Wingman Ventures, is raising $120 million for a new fund to target Swiss AI and tech startups. The firm says it's already raised $85 million and aims to make up the rest by July. An AI startup, Marco, raised $12.5 million in a Series A round led by Lightspeed Venture Partners, gaining funds to develop its technology that helps companies search the vast amounts of unstructured data in their systems. Blackbird Ventures and January Capital also took part in the round. Plus, BioAge Labs, a clinical stage biotech company developing therapies for obesity and metabolic disease, raised $170 million in an oversubscribed Series D financing round led by Sofinova Investments. We are going to have the CEO and co-founder of BioAge with us later in the program. Cara.
But first, let's go back to sort of what BioAge is using, AI, to spearhead moves forward in healthcare. For VC Spotlight, we want to talk about the broader opportunities, but also the strains that AI presents to the economy. Much more with Alec Ross. He's tech policy analyst and board member for VC firm Amplo. He's also the author of The Raging 2020s, Companies, Countries, People, and the Fight for Our Future. And of course, he served as senior advisor for innovation to the Secretary of State during the Obama administration. And Alec, we sit here at a time of ultimate disruption, it feels like. We're thinking of companies that are all in on operational efficiency in their earnings, but also letting go of people at a rapid rate. We're thinking of investment in technology, but jobs ultimately going to be disrupted by this. Where do you sit in the optimist versus pessimistic side of AI application?
I'm net positive over the medium to long term. Over the short term, though, it's going to be a little bit tricky because what we see is AI enabling automation of labor that isn't just manual and routine, but cognitive and non-routine. Is it's wiping out a lot of jobs, the likes of which, like my father, who was a lawyer. The kind of work my father did as a lawyer ought to be 99% done by software at this point. And that's not necessarily a bad thing, but it is a bad thing for people later in their careers who aren't going to be able to pivot necessarily. From a statistical standpoint, it's not going to be as bad as one might imagine, the impact of AI on labor. But over the short term, we're going to see some automation of a lot of white-collar jobs.
The interesting dynamic right now, Alec, if you look at the entirety of the news flow, is layoffs and cost cuts at bigger companies are in part being carried out to free up funds to invest in AI, ironically. Does the earlier stage ecosystem of all these startups that say we're using AI to automate or make more efficient a specific function feel any of that? You know, the reallocation of capital from, say, headcount to a new AI tool?
Well, yes and no. And first of all, let's have some, intellectual honesty around a lot of the drama around layoffs. Unemployment is really, really low in the United States right now. Some of the layoffs that are getting lots of attention are getting lots of attention because they are inside platform companies that have been hiring wildly for years. But if you take a sort of cold-blooded look at employment in the United States, unemployment is shockingly low. I live in Maryland where the unemployment rate is like 2.4%. That's nothing. So I don't think we need to be sounding alarm bells yet about layoffs, in part because those people being laid off inside these platform companies can go get work inside startups, the likes of which I invest in. And what we're seeing inside these startups is they are using AI in a way that is enabling them to not have to build their headcount too fast. So this is enabling the growth of really lean startups. So I think it's actually helping the startup ecosystem a little bit more so than some of the flabby-year-old platform companies that are doing some of these layoffs.
Alec, we were just speaking with Kai-Fu Lee a little bit earlier, who does feel that there's going to be a limitation on these big tech juggernauts that have been so ahead of the curve in AI development thus far, but it's going to lead to cannibalization of their own business models, and ultimately they're not going to be AI first. Are all of the companies that you're backing now ultimately AI first companies, or are they having to reestablish themselves, rethink about their headcount, rethink about the way in which their business model works, for example, like a Grammarly?
Yeah, so not all of them are necessarily AI first. For a lot of them, AI will be a new tool in their toolkit. The most exciting examples of an AI first company, the one that leaps to mind, I'm speaking to you today from Italy, and I spent today visiting with a company that we're backing in Switzerland called Kyan Health, Kyan. And they are using AI to provide mental health services into big companies. And they're doing so AI first. Something like this wouldn't have been possible, providing AI-enabled, enabling mental health services to tens of thousands of employees that has a human component on the back end, but has an AI component on the front end. That kind of thing wouldn't have been possible years ago. And so this ultimately, I think, is showing what AI can do to help the world a little bit.
Alec Ross, tech policy analyst and board member at Amplo, thank you so much for your time. Let's get back to BioAge Labs, which we mentioned earlier, just announced the close of a $170 million Series D round to develop new therapies for metabolic diseases using the power of AI. Co-founder and CEO Kristen Fortney joins us now. So I guess it's a sizable D. What is it that you need to invest in the context of AI? Help us understand how AI will ultimately accelerate, I guess, the work that you're doing.
Sure. First, and thanks for having me. It's really great to be here. So how we use AI at BioAge is really to understand human aging. So human biology is incredibly complicated. You have, for example, tens of thousands of proteins in your body, each with a different role to play in health and disease. And it's fundamentally a data question to figure out, which proteins matter for certain processes versus others. And at BioAge, we really study what helps individuals live long and live healthy for a long period of time, right? Because some people are very healthy well into their 90s. They're still very physically capable, still very mentally capable. So AI for us is really at the beginning of the funnel, helping do target ID. And now with this financing, this incredible Series D financing, what that's really going to power is our clinical development. So phase 2 clinical trials of our lead drug for obesity.
And that you're doing in combination with Eli Lilly. And I'm interested as to how much you have to go hand in hand with the older guard, those that are already bringing these to market.
That's a really great question. So our drug, which improves muscle and metabolic function, really shines in combination with these incretin drugs, these drugs that Lilly and Novo are currently building. So for the phase 2 trial, we're going to be combining our drug together with with Lilly's drug to show if we can increase the quantity of weight loss, so that get more weight loss, as well as the quality of weight loss, to have it be really healthier weight loss with a better balance of muscle to fat at the end of the treatment. Importantly, too, our drug is an oral drug. It's a pill. And the future here is really to, instead of having to inject yourself all the time, have a weight loss pill that achieves the weight loss that you need and in a healthy way.
Kristen, what's your biggest cost? Real quick, we had 30 seconds in the funds that you've gained. What are you going to spend on headcount or software or compute?
For sure. So for a biotech, the largest cost is the clinical trial itself. So you're going to require hundreds of people that are taking your drug for months at a time and look at a really comprehensive battery of tests. So that more than the head count or the software is the big cost eater.
We'll see you put that money to work. Tell us how the trials go. Come back on the show. BioAge Labs co-founder, CEO Kristen Fortney on that $170 million raise. Meanwhile, well, that does it for this edition of Bloomberg Technology. Come rain, sun or snow, we'll bring it to air here in New York. But so much to digest, Ed.
Yeah, and it's a big week for the gig economy. I really think this is going to be something that we'll be talking about and learning a lot about the world we live in through those earnings. Check out the pod, recap the conversations, Apple, Spotify, iHeart. From a snowy, blizzardy New York City and a standard, lukewarm, sunny San Francisco, this is Bloomberg.